Swapnil Kendhe. Yes, Swapnil. I try to to pronounce your name correctly. He is working in India, and he will share with us his experience, how he built his business of financial consultant in India. It's a very big country, and Russia is also a big country, and I think his experience will be relevant to our country also. Swapnil, you can share your presentation.
Good afternoon, everyone. And since we don't have as much time, so let me directly get to my presentation. I'm a chemical technologist by education. I worked for 3 years as a production executive. And then I left job to do something of my own. I started a business failed. It left me with lot of debt and I did not have any income. So in 2012, on a friend's suggestion, I began selling insurance and mutual funds in India. Now, 2013 was an interesting year in India because for the first time in India, in 2013, commission-free products were launched. And in 2013 itself, SEBI, which is Securities Market Regulator in India, it came up with this investment advisor regulation. Now, what this investment advisor regulation says that if you want to work in India as a financial planner, or as a financial advisor, then you must register with SEBI as an investment advisor. And once you register with SEBI, you cannot sell any commission product. You must work on fee only model. So right now in India, all investment advisors are fee only advisors. By 2014, I had decided that I wanted to become an investment advisor, but the problem was to become an investment advisor, either you need post graduation in finance or you need 5 years of experience. Since I did not have post graduation in finance, I had to wait till 2017 to apply for investment advisor registration. And in 2017, I became a registered investment advisor. And since then, I have been working as a fixed fee financial planner. Now, what is my model? I work on education plus financial planning model. So here is the deal for my clients. You work with me, you understand how money management is done at retail investor level, especially in a situation where you cannot manage your money full time. 2 or 3 engagements would be enough for you to become a capable do-it-yourself investor. Thereafter, you can manage your money on your own. You will have an option to do it yourself, or you can keep renewing the engagement with me. Now, in India, different financial planners are working on different models. Here is my model. Every engagement is for 6 months. Initial engagement is having 5 sessions, 1 hour sessions, and then my availability for need-based consultation for 6 months. And renewal engagements is one review session plus my availability for need-based consultation throughout the duration of the engagement. Now, what is my fee? In the initial engagement, the fee is 40,000 and review engagement fees are 12,000 plus in India, my clients have to pay 18% goods and services tax on top of the fee. What is my investment philosophy? I follow Benjamin Graham's defensive or passive approach of investing. Now, in this approach, our primary focus is on avoiding mistakes or avoiding serious losses because investing, especially at retail investor level, is that game in which over long term, that investor does better who commits fewer mistakes. Second, we try to construct permanent portfolios here, portfolios that can majorly run on autopilot, which does not require frequent monitoring and changes. For equity allocation, my preference is market cap weighted index funds, but in some cases, I also use flexi cap funds. Flexi cap funds is the category of funds in which fund manager doesn't have any restriction where he should invest. I try to keep credit risk and interest rate risk as low as I possibly can. How is the session flow? So here is how session flow goes. After receiving the data, we do this financial planning discussion in 5 sessions. Now, in first session, I discuss data of client in detail. So I try to understand client's life situation, his financial situation, his financial goals, aspirations, and also his understanding of money management so that I should get some idea how exactly I should approach that particular case. Now, in the second session, we start with financial planning calculations. Now, for financial planning calculations, I do not use the conventional approach of financial planning calculations. I follow this other approach of financial planning calculations, which we call back of the envelope financial planning calculations. This is a simple trick to do financial planning calculations, and you do not even need calculator to do these calculations. Now, why I prefer this method of financial planning calculations? Because in conventional approach, you have to take many assumptions, and all these assumptions are about future, and future is unpredictable. We do not have any idea how exactly the future is going to pan out. So no matter how advanced financial planning calculator you are going to use, the output of that calculations, whether they are correct or how correct they are, depends on whatever assumptions you are taken, how correct those assumptions are. And there is no way to arrive at exact assumptions. So no matter how advanced tool you use, the output that you are going to get is going to be an imperfect output. So when even a highly advanced financial planning tool, calculation tool gives you an imperfect output, why not use a simple trick to do financial planning calculations? And this is that trick. I have written an article on this. You can search my name along with back of the envelope financial planning calculations, and you will find this article. And in this second session, next thing that I do is I discuss two approaches of intelligent investing. Now, this concept comes in Benjamin Graham's Intelligent Investor. So I explain to the client that either you can follow the enterprising investor, which is full-time investing, or you can follow the defensive or passive approach. Now, if you want to invest like a full-time investor, then you need fund manager level knowledge and loads of time to do your own study and research. So if you lack any one of these two, it is better that you follow this other approach of investing. And then I discuss how we can manage clients' portfolio at asset allocation level. And I follow Benjamin Graham's asset allocation framework, where you try to keep at least 25% of financial assets in equity. You do not go beyond 75%. And instead of making changes in the asset allocation, we decide target allocation of the portfolio. We try to take portfolio to the target allocation, and then Benjamin Graham recommends rebalancing threshold of 5%, but we try to keep the portfolio closer to the target asset allocation. And then I discuss some important aspects of equity investing, especially in India. I discuss market cap weighted indexing in detail in this session. By the end of this equity discussion, that is at the start of fourth session, we try to construct an equity portfolio for the client. Now, there could be different ways of constructing equity portfolio. I discuss this different option with the client, and then we finalize one portfolio, which client is more comfortable with. In the course session itself, I also do discussion about what are the product options we have available in India on debt side, interest paying instruments. What risk hits you there? What is a way to bypass that risk? Which are more tax efficient products? Which products we are going to use? And how we are going to use those products. So by the end of these 4 sessions, I construct an investment philosophy for the client. And then once this framework gets constructed, we use this framework for financial planning, which we do in the fifth session. Now I have prepared small documents. As we do this discussion, I start sharing these documents with my clients. So I have 12 documents that I have prepared. So as we start discussing these concepts, I start sharing these documents with the client. If clients read these documents, they will find additional details which I may not be able to discuss with clients in these 5 sessions. If they do not read these documents, even then it is perfectly fine because I discuss bigger and more important concepts myself with the client. Now, in the fifth session, when we do financial planning, I do not follow the conventional approach of financial planning. Now, what is conventional financial planning approach? In conventional financial planning approach, financial planner constructs a PDF document in which it is written how exactly the client should manage his money over next 20, 30 years. Typically, different portfolios are recommended for different financial goals. Now, I do not follow this approach. For me, money management is very simple. I should have a clear idea where I am today. I should know where I want to reach. I should have clarity about what kind of investment philosophy that I want to follow, because there are too many smart sounding approaches of money management available in the market. There are thousands of financial products available in India. So, if any investor doesn't construct this investment philosophy for himself, he doesn't construct few set of rules for him to follow, he will always be confused. Number of products they keep on increasing in the portfolio, and good money management gives you a peace of mind. It gives you a sense of control. You may not be able to have that sense of control or feel that peace of mind. So therefore, I want to construct this investment philosophy. Once I do that, I like to take money management 1 year at a time. So my Google sheet, the last sheet is action plan for next 1 year. I do not like to think too long into the future because too many things keep changing. Client's life situation changes, financial situation changes, taxation rules change. Because of that, very possible that we are using few products today, and those products may not be as tax efficient after 1 year. If client take some interest in money management, their understanding of money management also start improving. And as your understanding of money management improves, your style of money management start changing. Therefore, I try to arrive at this action plan for next 1 year. Now, action plan for next 1 year doesn't mean that whatever investments we do those investments only for next 1 year. I follow this two portfolio approach. One portfolio for short-term needs. I want to ensure that whatever clients' requirements for short-term needs are, he has that much liquidity in the portfolio so that he should need to take out money from a wrong product at the wrong time. So first, I want to ensure that client has adequate liquidity in his portfolio for all his short-term needs. And once I do that, I run a single unified portfolio for all clients' long-term needs. And then we try to manage this portfolio at asset allocation level. Now, how to manage withdrawal from this unified long-term portfolio? I have written one article. You can Google my name. You will also find this article online. Now, after this action plan gets constructed, I am available for my clients throughout the duration of the engagement. They can contact me anytime to discuss anything related to their financial planning. The responsibility for execution of the action plan is that of client. I work on advice only model. Who are my clients? Who I work with? So my typical clients are do-it-yourself investors, DIY investors who take active interest in money management. More than 60% of my clients are from IT and related fields. And typically I get to work with people or investors who are stars in their respective professions. I am based in a smaller, relatively smaller city in India, tier 3 city in India, and I do not have any business from the city that I live in. All my business is online. Most of my clients live in bigger cities in India, and I also have non-resident Indian clients, NRI clients, in more than 20 countries outside India. Now, how do I acquire clients? Now, there is a blog, personal finance blog called freefincal.com. This blog is one of the most popular personal finance blogs in India. And this blog promotes fixed fee financial planning. And I have been writing guest articles on this blog since 2018. So all my early clients were readers of this blog. Then we have an association of fixed fee financial planners in India called as Fee Only India. We have this website feeonlyindia.com. So some business I get from here. And then since I have been working on this model since 2017, I have significant I'm in referral business. So major part of my new business is referral business. And recently I have also started getting business through ChatGPT. Now building the client trust. So definitely at the start of my career, I committed a few mistakes. But from my mistakes, I understood one thing, that every financial planner will have a style of his own. And this financial planning engagements, especially these online engagements, works best when clients' expectations and advisor style of money management match. If there is mismatch between client's expectations and advisor style of money management, these engagements are not going to work. So I try to make as clear as I possibly can what approach I follow, what client is going to get if he is working with me, what he is not going to get. I take introductory calls very seriously. At on introductory calls, I try to spot any red flag. So if there is any red flag, then I will try to discourage that person to become my clients. But once I accept any engagement, then I try to deliver more than what I promise. And since I work on this fixed fee financial planning model, anyways, there is absolutely no conflict of interest. So that also helps. What are tools that I use? So the way I do my working, I do all the financial planning work in a Google Sheet. And I do not see any reason for any financial planner to have, I mean, Google Sheet or a spreadsheet is more than enough to do a financial planner's work. So I personally do not use any financial planning software. There are other fixed fee financial planners who do use financial planning softwares, but I absolutely do not see any need for that. And my personal opinion is that you try to make things as simple as you possibly can. Because simpler you make things for the client, better they would be able to appreciate it. Now, what is my opinion about these different models of advisory? So now the answer depends on uh, whether we answer for investor or we answer for investment advisor. Now, purely from revenue point of view, commission-based model is the most lucrative. There is absolutely no compliance burden also on commission sellers of financial products in India, but then incentives are not aligned with the client's interest. Next best model from revenue point of view would be fee only model, but where you charge a fee based on assets under advice of the client. Now this is difficult to build model because nobody, I mean people, it is difficult for people to directly pay fee to you. But this model can earn you as high income as you can earn in a commission based model. The least lucrative model from revenue point of view is the fixed fee financial planning model, which I work on. But this is the most transparent, most conflict free, and best model, especially for clients or for investors. Now, when this model is not as attractive from revenue point of view, then why I'm working on this model? See, what kind of work I'm doing. As a fixed fee financial planner, and as an advice only financial planner, I'm trying to understand my client situation, and primarily I am managing my client's money at five levels: liquidity in his portfolio, asset allocation, I construct equity portfolio for him, I construct debt portfolio for him, and then I discuss insurance with him. Now, none of these five things require 10 times more effort if you are managing portfolio of client who has 10 crore of assets compared to a client who has 1 crore of assets. So therefore, especially the kind of work I'm doing, it makes absolutely no sense why I should be charging 1% of more of client's assets as fee. So therefore, I do not see why I should be charging this fee. And if something doesn't agree with my sense of integrity, then I do not care what other people are doing. And though I do not earn as much money as established financial planners who are working on AUM model, but I earn enough in India which help me live a comfortable upper middle class lifestyle in any big city in India. And I refuse to dilute my ethical standards just to earn more. So this is all I had to cover. If you have any questions, I'm open to your questions.
Yeah, thank you very much. Swapnil, we have a couple of questions for you. The
Yes.
first one, how many fee-only advisors are in India?
There are close to 1,000 fee-only financial advisors in India. Now, majority of these financial advisors work on asset under advice model. The model I work on, there would be around 35 fixed fee financial advisors in India. So these are still early days of fixed fee financial advising. Majority of advisors work on commission based model.
Mm-hmm. Yes, I think it's something like it in Russia also. And how many clients per month are comfortable for you to handling?
Huh, so, uh, so because the kind of work I do, there is limitations on how much business I can attract, how much business I can handle. So typically, I like to work on 7 or 8 new plans, and then I have at least 8 or 10 renewal cases. So once I get that much business, I stop accepting new business for some time. And once things get in control, I again start accepting new business. Right now, I am attracting more business than I can handle.
And another question, you started at 2017 as a financial planner.
Right.
How long did it take for you to get to stable and good income?
It took at least 4 years. After becoming this fixed fee financial planner, I did not have any online business for at least for 6 months. Before, I mean, thereafter, I started writing guest articles on this blog, freefincal.com. And earlier, what used to happen that I would write one article, that article would get some business for me. Again, that business will dry up. Again, I will have to work on another article. That article will get published, and again I will get some business. Again, it will dry down. So it took me at least 3.5 years to get steady flow of business, especially online business that I'm targeting.
Hmm. And can advisors in India use international diversification for clients' portfolios?
Yes, we do. We do. So in India, there are a few products. So, so in India, I mean, people directly invest in international stocks or ETFs through interactive brokers. I personally prefer Indian mutual fund route because we do have some mutual funds in India which help you invest in international stocks or international ETFs. So I personally prefer that route.
Hmm. And you said you are a fixed fee advisor, so you don't have success fee from your clients. Do you think is it a good or bad model?
This is absolutely perfect model, especially because see, I want to live my life in a certain way, right? Now, this model helps me live my life that because I work on advice only model and I work with DIY investors. So for me, things are very simple. Just advise investors where they should, which products they should use, how they should manage their money at asset allocation level. Everything else is managed by the client, and I can control my life very well on this by this model. In fact, I can have employees or paraplanners and I can handle bigger, larger volume of business. But I don't want to do that because once you have an employee, it brings certain degree of bondage with it. And I like my freedom. So this model gives me a lot of freedom.
Okay, thank you very much, Swapnil. And it was very, very useful. And but we have not much time to speak with you further. And I hope we will meet again in a separate meeting for our advisors, maybe in a month or two time. But now we should switch from you to another guy, Derek Notman, who is American advisor.